Are we live? Are we live yet? Hey, are we live? Oh, we're live. What is up, everybody? Welcome back to the Russel Journal. My name is Russell, and this is my journal entry for Wednesday, January 25th, 2023. A lot of cool stuff to share with you today. First of all, this one, balance is up. Had a nice, pretty good gain today. 2 trades in the market. We'll cover all of that later as we get into more of the stuff. Anyway, take a peek, take a gander. And then we're going to make it go away because it doesn't matter. You're only as good as your next trade. So happy about that. Great. Fantastic. Moving right along. Okay. So waking up this morning, obviously with the gap down, and then for the reversal into the gap fill, I found it very interesting to wake up and have this gap down and to even see this sort of minor sell-off. And I already knew, I kind of had in my mind that, so from yesterday's show, it was very funny because my first thought was from yesterday was that we were going to look for a short trade, which if you were trading overnight, it would have been an excellent short trade, given Microsoft's guidance. I believe that's what really caused this whole thing to sell off was Microsoft gave some pretty lousy guidance. The thing is, and this is again something that why I do look at a lot of the macro picture and the catalysts out there. You have unemployment tomorrow. You have the PCE inflation numbers tomorrow on Friday. You have FOMC next Thursday, and you got Apple earnings coming up, right? You've also somewhere in there, you'll have Google and a few of the other big boys coming in for earnings season. But so the idea that like, this market is going to be able to shit the bed and just start nosediving into a bear territory. You're really way ahead of yourself. Okay. Now markets are cool things because they do look forward. They're into forward-looking things, but there's also a point where what the market is worth today, and today our market is not worth nothing. Just Microsoft shares earnings alone was enough to say it's still worth something, right? It's not worth nothing. And so people will be willing to buy it for what it's worth today, even if it's going to be worth less tomorrow, because in a year, 2 years, 5 years, it will be worth more, right? And what they're all there, and they really do, there's a group that really lives in the present as far as what this goes. So again, with all of those catalysts coming out, I was pretty well aware that, you know, even with this gap down into the morning, we weren't going to sell off and just continue to, you know, get that continued move down. I'm going to adjust this a little bit. So, because I feel a little out of sorts. So I was definitely coming in again, brought this slow stochastic way down on pretty much all time frames. The 2 hour was the only one. This is the thing I want to show you that's actually kind of cool and that kind of sort of more or less validates my setup is if I go to the 2 hour. 1 minute. There we go. 2 hour. You can see here, and this is sort of validation for my setup. You can see here the slow stochastic came out of the overbought reading, and we gapped all the way down here on the 2 hour to that 18 period moving average. You see it on the 4 hour as well. And the other thing that you can see is that we made a run right to the one on the daily. This is cool too. This is more or less the thesis of my setup is that you will make a run for the closest main moving average. Now check this out. You didn't even lose it there where you lost it, and you made a run right here. You came down right to the 100-day moving average or 200-day moving average. So the statement behind my trade setup thesis is that when you lose an overbought or an oversold reading, price will make a run to the closest main moving average. Now, this is not my statement. This is something that came from Ira Epstein. Again, I highly recommend. He's got a couple classes. You should take them. They're very interesting. It's got some good stuff. It's not a day trader setup though. That has been one of the hardest things for me to accept, the fact that Ira is a swing trader and a futures trader. His stuff works really well with swing trading. Futures contracts is not a day trade thing, but it does give a very good explanation to where you are in space and time relative to the market to itself. So anyway, that is something neither here nor there, just point of interest, and I have to give credit where credit is due. Okay. So again, you can see came down to the 100 or 200 day moving average, and we caught the big move right up off of that, closing back up. So again, I think you're going to have a lot of talk around the water cooler that says, oh, we're going to break to the upside. We're going to rally. This really wants to go, closing up here back above 400, to take that hit and close above 400 is fairly bullish. We will see though, that obviously took an enormous amount of firepower to make that happen. So we will see. We'll go into my trades, but what I want to talk about is, so we came into that, and while I'm waiting for my trade setup to happen, I am, let me go over there. I was going to put this on, but I forgot to go to Twitter. I wanted to come in and talk about some of the stuff that we saw in Twitter. Okay, so we're going to close the broker window. We're going to open this window, and we're going to go here. Does that bring that up? No, not that one. Broker window. Maybe this one. No, not that one. Okay, give me 1 second. I got it. No. Give me 1 quick minute, guys. I was going to do this and I forgot to. Window capture. There we go. Got it. All right. Now let's move it back. Okay, there we go. Okay, so now I'm not going to show you the tweet that set this whole thing off. It was very interesting. Basically, somebody on Twitter asked the question, why do most traders lose money? Now, if you've read the description of this video, you'll see a lot. This is a common, very common question in trading culture. We talk about this a lot. We hear a lot about this. And there's a couple of reasons why we hear a lot about this. One, I think there's some misconceptions around trading and who's really doing anything with trading and who's not. Okay, who's just dabbling and who is, and who is. So the idea here is very interesting. Now, the one thing about this question, a lot of times, this is a precursor more often than not to the question of why do most traders lose money, is a precursor usually to some type of sales pitch. I do not have a sales pitch. This channel is not about selling anything. To be honest with you, if I thought there was money in selling stuff around trading versus trading itself, my belief is if you're going to make so much money trading, why do you need to sell products? There's answers to that, but I just don't really agree with the idea of selling trade knowledge at most degrees, unless it's really, really somehow proprietary. Most trading knowledge and most stuff you're going to get from most trading gurus is not proprietary. There's nothing proprietary that you're going to get from them. So now this is not to really say anything or anything like that, but where you are here is you get this question, and the very first thing that you're going to hear out there in the markets a lot, or around the trading water cooler or trading chat circles, is 99% of most traders lose money. First of all, the very first thing I want to say is I have seen, in the 3 years I've been doing this, I have seen no statistic no statistical evidence that shows 99% of traders lose money. That statistic could be true. It could not be true. I do not know. Okay. What I have seen is that something around 80% of people who try trading don't stick with it, and usually due to losing money. I've seen statistical models on that, but I have not seen anything that says 99% of traders lose money in the market. Lose money. And even furthermore, I don't know what it means to lose money in that statement, as far as the statement goes. The answer to this question becomes very, very simple once you boil it down. And where most people will go right away is emotions. They will say the reason most traders lose money is because of emotions. And although that is true, I don't think it is the deepest root of trading. And what I'm seeing in my own trading and what I'm experiencing is that what's really allowed me to lose the most amount of money so far has been ignorance. And it is the end of ignorance that begins to see consistency come into play. And it's also where I begin to sort of not worry so much about emotions, not use emotions, not lean on them, or not even actually have them. Really taking a trade and having it be emotionless trading, where I'm just executing a plan based on a setup. That is a step of growth that I feel I am taking. I believe I am taking. So, and as of now, the numbers are showing that I am slowly yet surely turning that corner. So, but where this came into, I saw this question and I didn't reply to that tweet because typically I see tweets like that are how you would say, they're usually bait. Okay. Usually if somebody asks some type of very broad question like that, they're not really trying to get the conversation going. They're just simply trying to get you to reply. But it did make me stop and reflect. And something I wanted to put into my Twitter feed, I can go back and look at many times, is really the levels of ignorance that I have had in trading. They're massive, you know. I remember trading and using. I remember the very first thing I did is from trading. I went from trading on my own, just watching YouTube videos. I tried to jump in at Humble Trader and with Shay and her trading team. And those guys are amazing. They're fantastic. You can learn a ton from them if you want to trade penny stocks. I wouldn't say anything to deter you from going over there. They do cost money. It is expensive. It's not that expensive, but it's not really cheap either. So I would be careful of that. But other than that, anyway, so I jumped in with them and I began trading, right? And then and to varying degrees of success, right? I'm learning different things, how this works, when to set, where to set my entries, where to set my exits, both on risk and profit taking and stuff of that nature. But I'm not really getting anywhere with that. It didn't really get anywhere with that. And I learned a lot. And from them, it taught me enough about some indicators that I knew some new questions to ask. And so I began researching my new questions. And that led me to scalping methods using the EMA. And that was very successful for a time until it stopped being successful. And you will find there are some setups and some trade systems that work until they basically don't. There's EMA scalping is definitely one of them. You don't see them on the chart every day. Heikin-Ashi method, you don't see them trading that every day on every single chart. So it's definitely wasn't a system for all markets. So I began looking for a system that was more focused towards all markets, which then gave me new questions to ask, right? But that one was the Heikin-Ashi method worked for a long time. It gave me 6 months. It let me regain my losses. It allowed me to make a nice amount of money. I doubled what I lost. So maybe what I lost plus 100%, which was fantastic. And then until it didn't work. And I began to search again for trade setups that work for all markets. And I've gone through all sorts of varying different things because my challenges tend to keep changing. When I was trading at that point, I kept a balance of about $6,000 in my account until I lost pretty much most of it. I did, I lost about $3,000 of it. Another $3,000 I actually just took out for other reasons. But that was a long time ago. That was, 2 years ago at this point. And then my account dwindled. It got to a small size. And so now I've had to sort of adjust and learn how to go back and trade a very tiny micro-sized account and how to build it back up. So it has gone through like different iterations of different goals and different challenges at different times, and things that I can use for that. And the thing that it really has led me to is again, this kind of concept of learning a setup that would work in all markets, that works with an account size, and it can be scalable relative to your account size. So right now, that's really a lot of what's being built for me, or I'm building as it goes. And so, but that leads me again to, it takes us back to all these positions where I'm ignorant, right? So, when I realized that, momentum trading would stop working, I can't go short. The only way to go short was to learn to trade options, right? We were coming into the bear market. We were turning the corner back in 2021 into this bear market. Things were changing. My long only strategy or ability wasn't really going to be profitable as far as I was concerned. So I began learning about options. You learn some stuff about options, you get some stuff, again, wound up in a position where I'm trading off of the EMA, some similar stuff, break below the 200-minute moving EMA and hold until it gets above the 2-minute moving, or the 200-minute, things of that nature. It was kind of chaotic. And again, finding things that worked until they don't. And that led me to even more stuff, more losses. Things didn't work. I began trying to be more macro focused as far as like my trading goes. Okay, what are the catalysts coming up? When are they going to be negative? How are they going to be negative? Right. And sort of into that sort of thing. And that made me make decisions, but there were only decisions based on stuff. They were decisions that lacked knowledge, right? It's been a year and a half of really slugging it out, learning to trade options, getting my ass kicked and my nose bloodied, for trying to learn options. And everybody you talk to, nobody I watched really emphasized how important something like delta was. Looking at delta, premium to delta ratio. Nobody talks about that. Nobody looks at those. They don't talk about, hey, how this is going to be a flat day in options. Now, a part of that is because most people who trade options are swinging options. They are putting on spreads that are meant to be 30, 60, 90 days out. They are both buying and selling contracts. They are doing something beyond what I'm doing. I have exchanged options for shares. Okay. I am momentum trading options for shares. That is what I have done. So I haven't found anybody who's doing this like I'm doing this. Not anybody who teaches it. Maybe one day I can be the guy who can teach this. I don't know. I'm not, we're so far from there, but really not finding guys who are swinging, who are trading single leg options in lieu of this. I traded with, and to give you examples, I traded with Peter Resnicek over at Shadow Trader for a couple of months, and very awesome, amazing trader. That dude can put up $10,000 in a day very easily. Very smart guy, and knows just tons of stuff about the market behaviors, technical analysis, things of that nature, and where and how to maneuver with options. But all of his stuff involves very complicated structures, right? They're very hedged, in their position. So it wasn't going to work for me on a small account because it takes a lot of money. It costs a lot of money. You have to have a lot of maintenance in order to, especially if you're going to do something like SPY or QQQ or DIA or even IWM. You have to have, if you're going to sell puts, you have to have cash secured puts. So you need to be able to purchase 100 shares of them at your strike price that you're selling for. And then, or covered calls, which means you have 100 shares of SPY in order to sell at in the event those options are exercised. So it wasn't really going to work for me to sell contracts with a small account size. I was going to have to, if I want to get to that, then I have to build the account from that. So trading single leg options contracts has done very well. I did try doing some long spreads, which are where I buy both puts and calls. And if you've seen my $1,000 loss video, then you know that the spreads did not work for me. There's too many. Again, with $1,000, you're not able to purchase contracts far enough out with enough time to let them work. So that definitely blew up in my face. It was definitely one of those things of one step forward, two steps back for me. Anyway, so going into this, one of the things we talk about is ignorance, and we talk about ignorance of things. You know, ignorant of your setup. Are you confident? Do you know what that setup is? How, do I know what my setup is? I know what it is now. I really do. What are the risk factors involved in your setup? And we will go through more of my risk factors coming out next week. I'm almost finished with my PowerPoint and having that set up as far as talking about risk management and how it falls into my setup. And then, really, how confident can you be in your profit targets, things of that nature. There's a lot of times I have cut myself very, very short trades that should have made a lot of money. We'll review the trades I made today. Could have made a little more money. There's a couple of times where I'm glad I didn't. I'm glad I didn't hold out because the illusion of more money. So we'll talk about that when we review trades for today. But going into this, so my belief is that the reason, if you're a trader and you're losing money, if you're like me, the reason and that's the thing, I shouldn't address you. I'm not better than you. I don't know more than you. I'm none of those things. So let me take on some humility here and express this. The reason I lose money at its core is because of ignorance. Okay. I make emotional decisions out of ignorance. I could manage the emotions all I wanted to. And maybe those emotions may have stopped me from making a bad trade at some degree or another, but it was never going to solve any of my problems until I got more information. Okay. The one thing about it is, because I made a lot of those mistakes, I was able to see problems and find some solutions to them. Okay. Again, we will see going forward. Right now, we are doing well as far as I'm concerned. The account is doing well. I am growing as a trader. I have not hit the consistency point that I would like to yet, but we are working on it. We are getting there. That $125 a day is definitely the dream, and we will see if we can get to that. Now, this is something that where this guy Nick that I've been talking to, he and I've been still kind of been talking, and I said I didn't really want to work with him, and I kind of wind up talking to him. So it's really working out. And this is what he said, and I'm going to read it, and then I'll step back so you can read it. And he said, becoming aware of ignorance is progress. At the start, 5%, at the start, 5%, and 95% is stuff you don't know. You don't know stuff you don't know that you don't know. This means you think you know everything. As you progress, you learn more, but also more knowledge becomes known as unknowns. You feel more dumb as you learn more. Okay. So I think a lot of this is to say that when we begin, we learn something, right? I go back, and this is part of the reason why I brought up talking about learning EMA scalping Heikinashi method, right? At the point that I learned that, maybe 5% of the knowledge that I have, it's probably not even that. It might be 1%. I don't even know that I have that much knowledge. There might have been like 20% of the knowledge I had. I could look into a chart and I could see EMA scalping working, the Heikinashi method for that. And I took advantage of it, and it worked. And you could spot it on the chart. And it did. It was very good. It worked very, very well. And so I began to filter everything that happened in the market through this one trade system, this one type of trade setup. That was it. Okay. And I really ran around, puffed my chest out. I was really feeling like I knew a lot. I was really good at trading. I really knew stuff until it stopped working. And when it stopped working and I started losing money again, then people began to realize, well, maybe he doesn't know anything, and I knew at that point that I didn't know anything. And I had to go on a quest to find more information. So I think the big thing is that, like, whatever it is we think we know, whatever we're confident in, it works to a degree until it doesn't work, and until we have to find more information. And I think as you begin to find this more information, you track that knowledge, and you track your performance with inside of that knowledge, right? This is a huge step also that I missed. I was, there's a guy, he runs a channel, Be the Trader, interviews other guys about trading all the time, and most of them will tell you that they didn't turn the corner into consistent profitability until they began tracking all of their trades. They wanted massive amounts of information. If you listen to anything from the guys from S&P Capital, and I would listen to those guys, they know a lot about trading. They're very good. And they talk about tracking your trades, knowing what time of day you trade best, what time of day you trade worst, know how many trades you take that are good, how many trades you take that are bad, how much you make on average, how much you lose on average, a whole host of things, right? That they keep in mind, the knowledge that they keep right there at their fingertips, in order to know their performance with inside of knowledge. Because this is one of the things that makes trading very, very exciting, is that trading is in a lot of ways, it's like athletics, or it's like medicine. We practice, right? You have a doctor, he has a practice. You have athletes, they go to practice. Every day we get up, we are practicing trading. This is a trading practice. And that is, we are honing our skills, we're getting better, more knowledgeable, we're growing. And that's what makes a trader is I think be successful, is through that practice. They hone that discipline, they grow that knowledge, and they get better and better at what they do. And so I think that this is one of the main reasons why we lose at trading. And the reason I go to ignorance is because as you grow in this knowledge, as you practice this knowledge, right, you actually get away from, that is the antithesis. That is the thing that stops the emotion, right? The thing that makes you FOMO, that makes you chase, the thing that makes you wait too long or hesitate, or all of those things, that only stops with knowledge, right? And that knowledge is based in reality of fact, of market behaviors, and in your performance history. Those things, that is where you'll find all of that, or at least that's where I'm finding it right now. And it's being at this point successful. And when I do something wrong, having a record of doing it wrong, I then can hold it up against that knowledge and go, that is wrong. That is why that is wrong. And I can make corrections to the behavior. I don't think anybody wants to lose money. I don't think anybody wants to trade poorly, right? And I think if you truly want to do well, knowledge will help you. Now, the big thing about it is this, and this is something that he points out at the very bottom of this, is that the more we know, the stupider we feel. Okay. I've experienced this in two different degrees. One, a lot of times somebody points out to me that I should have known. I feel regret for not being smart enough, or not taking the time to think about it and be like, oh, duh. Right. This is right. But the other thing too is, we have to be aware. I think you need a very strong awareness of what is possible and what is not possible. But that's not really what I want to say here. You need an awareness of that something is going to blindside you at some point. Something is going to come out of nowhere and give you new knowledge. So that is that. Now we're going to jump in and talk really about more and more about my trades, what I did today, what I liked, what I didn't like. Okay. All right. So I had 2 trades today. One was 10 contracts. The other was 20 contracts. Worked out very, very well for me. Was pretty confident in both of these trade setups, and some stuff that I learned some stuff that I saw or experienced today that was very interesting. Okay. I'm going to go over here to this. Okay. So as far as, come on, man, this all the time. I don't know why I'm bothering to do that. So I spent a lot of time watching the 30-minute time frame today. That was where I did most of my stuff. Okay. And this was very interesting, very cool. Again, you see, like, basically sold off, complete recovery throughout the rest of the day. I sat in this setup here, waiting for. We watched as this came out of oversold. I entered my trade into here, and as we approached here, as the candle started going red, I went ahead and exited. Now, the reason I exited, there's 2 reasons that I exited. One, the options prices really fluctuated through these red candles. And this over here was sort of the maximum of where they could go. I am going to bring up options price action charts, bar charts, later next week. I'm going to bring those into this, and we will review the bar charts, and we'll talk about those more probably than this. But what we did see is we hit kind of right in here and we pulled back. Now, the cool thing about this is your slow stochastic can lead your slow stochastic into the next time, right? In the next time frame. And that's a lot of what I've been doing with this. And we got out of oversold down here, coming off of oversold on the 30-minute. Oh, that was the 20-minute. I'm sorry. And you can move it here, and I'm going to go, okay, so this is the 30, came out of oversold on the 30, held into that move to the 18. Now, normally this first challenge of the 18 period moving average is rejected. That's where I came out of here, looking at that 18-day reject. Okay. For the break above, okay, we got the break above the 18, and this opened the door for my second trade, again, just following the time frames. And what we were able to do is go backwards in time, or 2 shorter time frames, and I will show you what I did. So let's go to the 5-minute. This is where I things got really cool on the 5-minute. Okay. So for the 5-minute, this was a little bit different. So you rejected the 200 period moving average on the 5-minute, and you sold back down, and then you turned and you started going back up and you broke above it. When that happened is where I grabbed my second position, and we rode this all the way back up into kind of right into there. The 399 was a really good win for me. I was a little late in buying these, so I could have done a little better as far as this goes. And I did take profit into here somewhere. I didn't hold through this whole move to the upside. Some of that was I was watching the bar chart on the I was watching the candlestick chart on the options chain, and I was playing the 401 calls on that, and they were up. They came way up on the break of when we broke above 399. They came way up. I got out for like a 35-cent win on those. Average price on them was about 12 cents. And so, or no, it was 13. No, average price was 15 cents on these. The other ones were 12 cents. So these were 15 cents. And I got out, I had 20 of them accumulated, and they were, and we were up almost 30% on those when I cut them. And what I'm seeing happen, especially on these out of the money, is these big spikes up. You don't really know where the top is on this extrinsic value. So when we broke above and got a move above a pivot high on the options chart, and I can't show you that. I don't have it set up here, but I will. I promise I will bring those in so you can see them. When you begin to see selling pressure into that, that's when I go ahead and cut that position. I am working on kind of finding a way to not do that in order to be able to capture the rest of the move all the way into 400. I did shoot myself. I could have it could have been a $500 day instead of a $260 day if I had held that. I'd have done well. The one thing that I will tell you is when this broke above 400, this price here at 400, and then it came back down, right? When it broke above that kind of in there, the 401s shot way up. They were from where I bought them at 15 cents into the 40-cent mark, and they came slamming back down, and they were coming into the bottom of this pullback. They were back to 13 cents. So it was a bit of a get in, get out sort of situation. And it did happen very, very quickly where I didn't feel as though there was time to set up my stop loss. One of the things I will say about options, about options on Webull is it is not very easy. Like trading some of the option stuff is not right at your fingertips. Like if you use keyboard commands for like momentum trading, you know how fast that can be in and out very quickly. You can set up stop losses and stuff like that. You don't have quite all of those tools available just yet on Webull. They do keep getting better. And if you and I personally, commissions scare me, so I'm not willing to pad my thing for commissions, or at least these guys already do. So that's all being said. So I did have those two trades. Again, could have held for a few seconds longer and probably gotten had a little bit better day. But nonetheless, two solid trades, good entries. And this is too, one of the things too that I wanted to point out with this higher low type situation. This is, again, something I've been sort of putting into, I've been incorporating it more and more, well, at least 2-3 days in a row now. When your slow stochastic puts in a higher low and you're putting in a higher low up here, bulls still tend to have momentum in favor of that. So there's a lot of that going on there. So again, two really good trades. Really feel like I nailed the entries. Again, could have gone a little bit more. Need to let go of some limiting beliefs for profit taking, but at the same time, really, the goal here is not to make the most money every day. The goal here is to make money every day and not give any back, or give as little back as possible. So keep as much as I can. So that is really the goal. After I have that in some sort of consistent fashion, 2-3 months of that, we can really dial in how to let your winners run, or let your runners run, winners. Yeah. Anyway, but that's where we go. Again, those two trades, fantastic setups. Very happy about them. Very pleased with the trades that I took today. Not a lot of hemming and hawing and so that was very good. That is going to do it for me today. If you want to, go ahead in the comment section, leave what you think might make what causes traders to lose money. Russel Journal is written, edited, hosted by me, Russell Liss. We're produced by Social Media Shows. Our executive producer is Maria Pereza. Thanks for checking out the show today. And until tomorrow, just pretend I said that phrase that's not a catchphrase, but it's still a catchphrase now.